Money!
What Your Bank Doesn't Tell You, a podcast by You Mushroom.
Dear community, we are very happy to welcome you to our new episode of What Your Bank Doesn't Tell You. Today it's going to be a little bit more heavy topic. We are going to discuss how the markets reacted upon the recently started war between Israel and Palestine on the 7th of October. And it's already 2 weeks down in wartime. It's actually surprising. Only 2-3 flight hours away from here, there are two different war zones. And something which our generation, I think, is not quite used to have war so close to home. And a lot of questions actually reached us, right, on how do the different markets react, how do the different asset class react to those very shocking news. And this is going to be the topic of our current podcast.
Thanks, Luba, for your sensible words throughout the introduction. And it's really touching because, it's such a humanitarian terrible situation, but then if you look at the markets, it makes it a bit even more terrible because you sense that the market or the investors, they are getting used to drama in the world. So we had the Corona time, we had war in the Ukraine, or we still have war in the Ukraine, and now Israel. And the markets, they really seem to get used to it to a certain extent. And we only see very little reaction.
It is indeed the case. And one interesting thing, the first thing you normally look at is when there are this is, by the way, a geopolitical risk. That would be the technical term for the type of risk investors are bearing currently. And as you correctly say, actually, it turns out the geopolitical risk is kind of either already priced in or people are just used to these, unfortunately, very sad events happening around. So maybe to start with equity markets, one could see that since the beginning of the war, the U.S. equities lost roughly 3% as of today. There was even a spike in between in the last week. Similar is the Swiss and the European markets. We can say that actually the equities have lost between 3 to 5% at maximum since comparing the Friday before the war starts as of today, Monday the 23rd. And this, again, is a sign that the geopolitical risk is widely priced in the markets, or it's considered as a kind of a predicted event.
As you say, the markets, they are more or less unchanged. What we have seen is that during the last week, markets became a bit more nervous. So most of the losses were actually happening only in the last few days. And this shows that at the beginning, the market was not assuming that this conflict might spread throughout the region. So markets were really relaxed at the very beginning. And as you said, they even improved in the very first days. But a bit more volatility we could observe actually during the last few days. And also a very interesting observation is that usually looking at the bond markets, people say, or market participants, they say that the bond markets typically are a bit ahead of the equity markets, so credit spreads. They usually react quicker than the equity markets. But even if we are looking at the credit spreads, we see that the bonds, they haven't actually moved. Well, they might have moved because of interest rate moves, but they haven't reacted because of credit spread moves, which is very unusual as well.
Indeed. And if we continue further on down the road of the different asset classes, what is very interesting is what's currently happening on the commodity market. And I will start with energy. I'll leave gold for you because you're our gold investor. What is very interesting, I think the mood swings in the equities, which we currently been observing the last couple of days, comes from this energy prices are rising again. We used to have all the crude around $82 per barrel prior to the conflict, literally on the Friday before the conflict. And now it's going towards $90 per barrel. And that has a lot of implications. Obviously, production gets more expensive, but also a big question is about inflation. And as you know, central banks around the world are or particularly in US and Europe, are battling inflation. If we continue seeing rising oil prices, that would mean that potentially imported inflation through energy could be also observed, and this may have implications on the reaction of the central banks. Typically, how do central banks react? They increase interest rates. We expect, though, that there won't be an increase in the next session of the European Central Bank, and potentially also no increase in Fed in December. But nonetheless, inflation can be created also through increased commodity prices, and this may lead to making capital more expensive.
I think really inflation is the topic. And when you say oil has increased over the past few days, this is true. But we also have to put it into perspective. For example, the oil price we saw summer last year, when inflation really started spiking, we had a price of $110. So we were substantially higher than the figures we are seeing right now. And the situation is even more extreme if we check out nat gas. So nat gas increased over the past few days by 30%, which is a lot. But still, comparing to the levels we saw summer last year, we had levels of 730 British pounds. And these days we are observing a level of 120 British pounds. So we are still far away of the tops we have seen last year, but still the increase over the past few days has been substantial. And by the way, we are checking out the contract which is traded here in the UK, because this is the contract most relevant to the economical or global political situation we are observing right now.
Speaking of gold.
Gold.
Yours?
Mine. I'm the gold fan. So I'm observing this asset class quite closely. And usually gold is spiking when in drama situations. So basically when investors, when they are searching for a safe haven, they go into gold, or gold is one alternative. And even there, of course, we have seen an increase but not even by 10%. So it also shows that, yes, there is a bit of better mood for gold, but it's not kind of everybody is fleeing into gold. We didn't even crack the 2000er level of gold. And I believe this is kind of the magic level. If this level is broken, then people might become even more optimistic on gold. But we are still kind of lingering below this magic level.
It's interesting that you're saying, indeed. I mean, it's been since quite a while that the 2000 limit hasn't been cracked. And the gold reaction to me is almost like an automatic reaction. It was roughly, as you say, below 10%. It was roughly 8-ish. And it kind of almost naturally happened. I'm very curious what's going to happen the next day. But I wouldn't be surprised if it goes down a little bit as well.
Well, I think with gold, it's so difficult to say where it goes because, I mean, there are many influences on gold. You have the geopolitical situation, but then there is also the economical situation, mainly in the US. And there we see that inflation is coming down slightly, which is kind of a release for gold. And then we also see that real interest rates, they are getting lower as well. It's also a discussion with the Fed. Are they hiking? Are they not hiking? And at the moment, it looks like they are not going to hike, or there are not so many hikes priced in anymore, which kind of gives a release a bit on the interest rates. And these are factors which kind of are not supporting gold. And it's always very difficult to say which factor at which moment is considered the most important one. It's a bit like currencies.
Oh yeah. It's a little bit like currencies, and to add on gold also, there is also an industrial demand, which, funny enough, is almost very often left out of the equation. And there is also demand for producing jewelry, by the way. So it is actually also a precious metal used in the industry, but very typically we connect it with the geopolitical and the macroeconomic risks. And only one remark on the inflation before we move to currencies. That's actually also relevant. The inflation in European zone is actually coming down as well. So the magic limit of 4%, the interest rates currently 4%, which is the sogenannten Einlagenzinsen, that's the German expression for it, I don't know the English one, are probably going to stay for a while at that level and considered as a kind of a limit for the moment. Currencies. So normally a safe flight, we can say that our domestic currency is a kind of a gold equivalent. That's a safe currency. It's also very interesting. We didn't see a huge spike there either. The way I explain it, at least, and I'm happy to hear also your view, is I think we've seen a substantial rise in Swiss franc in the past couple of months. And probably there is kind of what shall we say, a saturated element in the markets for those type of hikes. And again, maybe the crisis has been, these geopolitical uncertainties kind of in the meantime actually present on the markets generically one way or the other due to the tragedies happening around. So a lot is already priced in.
Absolutely. I mean, and you mentioned it at the very beginning as well. There is no big drama in the markets because markets, they are not expecting that the conflict is spreading, and markets, they priced in already a lot. So we are here in this situation, seeing certain movements, of course, seeing that investors, they are getting a bit more conservative or a bit more cautious. But overall, the situation, especially if you are living in the Western world, there is no immediate impact on your daily life at this point in time. When we check out the markets, of course, not in general. I mean, as you mentioned as well at the beginning, we are extremely touched by this conflict, and we really hope that hopefully a resolution will be found any point soon. But with this, I think we covered all the most important points. We are taking your questions as always on hello@youmushroom.com. Any inputs, remarks are very welcome all the time. And with this, we wish you a very lovely day and are looking forward to welcome you to the next podcast.
Goodbye.
Money! What Your Bank Doesn't Tell You, a podcast by YouMushroom.